China's seasonally adjusted February trade numbers show signs of further slowing in the export market. The weakened export number, combined with strong commodity imports, has contributed to the largest monthly trade deficit in a decade, totaling $31.49 billion US dollars. Taking the first 2 months' figures together, exports to the United States and Japan, traditional major markets, maintain relatively stable levels, but exports to the European Union, China's largest export market, fell a further 1.1%. Although there were substantial growth in exports to emerging markets, including Russia and Brazil, these markets still make up less than 3% of total Chinese exports and are far from mitigating the declines in exports to Europe. In part, the 2-month trade data may reflect a delay in Chinese factories coming back online after the national holidays in January. Therefore, such a slowdown, while obvious, is not necessarily decisive. In fact, Beijing had anticipated weaker export performance in the first half of this year and planned subsidies and tax relief for the export sector to alleviate some of the strain. The long-term implications of the changing global economic situation is a growing recognition by the Chinese of the unsustainability of its export-oriented growth model. Beijing has placed its hopes on cultivating the Chinese internal markets by boosting domestic consumption and moving away from overdependence on its export sector, as part of a plan to rebalance its economy and address social stability concerns. But import data has yet to show strong signs of rising consumption by Chinese consumers, something backed by slowing retail sales numbers. With the annual National People's Congress session now concluded and the spring holidays in the past, Beijing is likely to again boost fiscal spending to encourage investment and consumption. And with state-mandated investment as the critical component of economic growth, Chinese imports of commodities and high-end machinery are likely to remain high. Beijing's efforts to manage its economy are complicated by increasing trade tensions. The Obama administration, ahead of the electoral season, has already started raising Chinese trade issues as a central part of its positioning. Following a series of moves to target China's renewable energy sectors, Washington, together with the European Union and Japan, has filed a complaint in the WTO over China's export restrictions of rare earth elements. China is also facing heightened economic tensions with the European Union over emissions taxes, and trade friction is rising with emerging markets in Latin America and with India. While a full-fledged trade war is not anticipated, the rising trade frictions and their political component requires Beijing to maintain a delicate balancing act in its relations and domestic policies. China's current trade deficit does not suggest an immediate crisis for the export sector or for the economy, but it has forced Beijing to reshape domestic expectations regarding Chinese economic growth and accelerated China's moves to restructure its economic system. Nonetheless, a sluggish export sector and emerging trade frictions will continue to pose a risk to Beijing's rebalancing plan.